Good morning, guys. Here's a quick update for my portfolio over the last few weeks. The year-to-date performance have been amazing so far. If you see until July 16, it was the peak of my portfolio at 25% up for that year, like from the beginning of the year until July 16, which is absolutely amazing, of course. The stock have declined after that due to fear of going into a recession, especially when we get the unemployment report. It went up from 3.9 all the way to 4.3, which is considered big, especially it happened during a small period of time. However, the Fed is already signaled that they are ready to cut interest rate, and they will only get encouraged to cut interest rate more aggressively if the unemployment rate went up. So for that reason, the Fed will be on our side, supporting the economy and supporting the stock market. So we should be safe to go. So the stock market, you see, that day on August 5th, it would have dropped significantly that day. Like I remember that day, I started the day minus $35,000, which is huge amount. However, it did recover within the same day, and I end up down only 17,000 and a half. So anyway, this is the last 3 months. You can see how we went up, it was choppy, and then we went significantly down. However, the stock market started recovering recently because all the other signals for the economy and the Fed was positive to support the stock market and the whole economy, as I mentioned. You can see the last month decline and then recovery. You can see the last week have been very positive, and today, of course. Tomorrow, Friday, August the 16th, is the third Friday of the month, and as you know, and as you might already know, I like to sell the monthly option. So I have a lot of option expiring tomorrow. Let's go through them quickly and take a look at how my positions are doing. So the first on the list is AMC. AMC is part of my gambling trade. You can see both of my options are doing great. I have a call for $9 that is going to expire out of the money, and I get to keep the premium. I have been selling calls against my AMC shares that I have been holding for a while and collecting premium. The premium was much higher during the bigger volatility that happened during the last few months. If the volatility came back up, then I will be able to collect more premium on it. So the second trade is on AMC as well. It's put. I have been selling a lot of puts, and I have a complete series of videos about my AMC gambling trade, and I call it gambling because it's really, you can't really predict where AMC gonna go. So luckily, it is going to expire out of the money. As you can see, the puts that I have left is for $5, and the price is 5.12. So I am going to keep the premium, and I will let it expire out of the money. I might make a dedicated video for my gambling trade, which include AMC and OKLO. You see, the next on my list is Ford. Ford has declined significantly over the last few weeks. So today is a big positive day, which is, of course, that's very welcome. But if you look at the 1 month performance, it went down from 14.75 all the way to 10.43. And it was much worse at some point. You can see here it's 9.61. It has been recovering slowly, but let me show you my trade on Ford. I have two different cover calls that are expiring tomorrow. Two for $12 and 9 actually for $13. I am going to keep the premium and maybe sell a new cover calls on it on Monday. I also have two puts that is currently in the money. You can see there is $12 put and $11 put. This is a sell, so you know I sold it. It's a cash secure put. So I am going to show you my both position. First, the $12 put. This I have sold it on July 10 when it was at its peak or close to its peak, and I only collected $20. However, because it's in the money right now, its value at 1.5, so I'm losing about $130 per contract. Since Ford doesn't have a lot of volatility, I take a look if I can roll it over, but it's not very profitable to roll it over. So what I'm going to do, I'm going to let it assigned and buy the shares and then sell a cover call. The advantage of that is that Ford has a very high dividends. If you look here on the NASDAQ website, you can see that Ford has a 5.89, and every year around February, they issue special dividends. So you can see this year they issued an additional 18 cents per share. That's on top of the regular 15 cents per share. And you can see the year before it was 65 and so on. So I don't have any problem holding Ford until the price appreciates, and I'll be able to sell it for a better price. For the $11 put, I received 21 cents, and I'm able to roll it over. So you can see here, if I went to the option, changed it, and I say I want to buy these to close, and I have 4 contracts. I actually get assigned one last night. So it was 5 and dropped to 4, which is it's no problem for me. I'll just sell a cover call on it. I took a look at what I want to do, and I think I want to go all the way to January actually and sell the $11. In this case, I'm gonna make about $60 more or less, of course, depending on the bid and ask. And then if we took that, let's say it's 58 at the second, divided on the $11, that's 5.2. Divide that on the 5 months we have to wait. So we are going to make about $1. I'm sorry, about 1% 0.05 per month. That's not bad at all for a trade that worked against you. I'm actually going to wait until tomorrow to see if tomorrow is going to be positive as well. It might generate even a better return, or actually if it went up by 5%, 6% or more, it might actually expire out of the money, which will be great. So we're done with 4. Let's take a look at next on the list. We have Robinhood. So as you can see, Robinhood, I have 2 trade on it. Both of them is selling cash secure put. I have the $19 and the $15. Let me show you the details about each of them. So for the $19, you can see today was a big upside day for Robinhood. You see the price shot up all the way 19.79. It's up more than 6%, and it has been up all this week. You see, it's 11.5. If we look at the month, yes, it has dropped from 24, it went down to 15. Robinhood is definitely innovative, and I will be very interested in holding it for the long term and collecting a lot of premium from the volatility in the meantime. So I will leave the $19 put. I have 2 contracts sold on it, and let me show you the details. So I have sold it here for 126 on July 10, and the average right now is $63 per contract. So you can see the unrealized gain is 92, which is great. I'm just gonna leave it expire out of the money tomorrow. The $15 is way far out of the money, so I am going to collect the $200 from this trade, and you can see here the full details about the day I sold and everything. Now I want to add one more thing about Robinhood. I have opened a poor man cover call that I have only 1 leg left of this trade. If I show you the details here, you can see that I bought the 15 that expire beginning of next year, and I sold the 22 that expire tomorrow. So I paid a total cost of $534 per contract. However, before the earning call, I decided to go ahead and close the $22 to give me a potential bigger return, and I closed it for $20 per contract. So let me show you the trade in my history. If I scroll down, you can see it here. So I closed all 5 of them, and that was on August 7, and I paid $100. For me, I think it was worth it, even that it didn't work my way. For this $100, I would have been able to collect a big profit if the stock shot up. It just didn't do it this time. Maybe next time, okay? So in any case, I could have sold a cover call on it earlier, but because the price was a little bit low, I really, like if I show you here, see the price was much lower than I would like it to be. So at this point, I'll just hold my calls, and it's considered a naked call. Now that price have shot up and it start going back into the $20, I am able to sell cover calls that's worth something. So if I looked here, if I say a call, a sell, if I want to sell the 1 month that expires in September 20, and let's say I go for the 22 again, I'm able to sell it for $51 or maybe 50, depends like the bid and ask. And you can see today it went up by $21. Absolutely great. Compare that to if you just sell it yesterday, you'll be regretting that, you know. If we go and look at longer time frame, so the October 18, like the $22 will pay us about 95. And if I look at the November, it will pay me about 1.59. So actually I do like this. So I want to go ahead and sell these. I have 5, so I'm going to sell 5 contract here. And I am going to put it 1.59. I tried to sell it for 1.6. It didn't go through. I could have waited and see if it will get fulfilled. I only waited a few seconds. So I went ahead and I changed it to 1.59, and it went right away. So if I go back to my position, you see here my total position in Robinhood, how many shares I currently have. So I have these two cash secure put. It's actually 7 contract because it's 2 for 19 and 5 for 15. It's going to expire out of the money. And you see, this is the new contract that we just sold. So the next name is Microsoft. I want to leave that to the end. Let's go ahead and go see OKLO. That's another name of my gambling trade. I'm going to keep it short since I might actually make a video, as I mentioned before, just for AMC and OKLO. So here I actually get assigned yesterday 500 share. That was part of the $10 put that was expiring tomorrow. I had a total of 7, so I had to roll over the last 2 to avoid getting assigned tonight. So you can see here I bought to close for 240 and then I sold to open 1 month for 265, resulting in a $25 credit per contract. So I have no problem with that. The 7.5, I had 12 contract. I just went ahead yesterday and closed some of them. You can see here I closed some of them. First 2 contract for $26 and then 5 contract for 70. They were both a big profit for me since the average credit that I received is much higher than that. And I wanted to reduce my exposure since it's a very volatile stock. So as you can see, like just today, it went up 3.68. It went down 1%. I'm hoping that these 7.5 expire out of the money, or I might just roll them over for a month if it drops. Let's go ahead to the next name on the list is SOFI. And this is just a quick trade that I did. I sold 5 contracts cash secure put for $6, as you can see, on July 19. For just 1 month, and I collected $9 per contract. It might sound a little bit, but the $9 is actually 1.5% return on the $6 stock, since both of them, they are small, you know. So going back to the next name actually is PLTR, and PLTR, I have a 1 cover call that it currently is deep in the money, is $27, and the current price is 31.21. If you saw my other videos, you know I have been rolling over this for a while every time I collect premium. So this is the last trade. I bought to close the $26 that expired in July 19 for $189. And at the same time, I opened a $27 strike, meaning I raise it for $1 that expired tomorrow. And I collected $259, resulting in a total credit to my account of $70 per contract. Like that's absolutely amazing. You know, their implied volatility is over the chart for such a quality company. So I'm very happy with it. Like the return is really amazing, have been for all my contract on PLTR, whether the sell cash secure put, the put credit spread, and I have some poor man cover call and a call debit spread. All of them have been successful. I am also going to roll over this probably tomorrow. If we go ahead and take a longer time frame, so like November, now we're talking 3 months from today, we're able to roll it over all the way to 30. I'm not going to pay a debit, nor I'm going to receive a credit. So if we want to take a different option, we can go all the way to January for 5 months. You know, you can see I already have 4 cover call that I'm selling for $30. If I want to match them and make them a 5 contract, you see I raise the price for $3 and I receive an 85 cents. So probably by tomorrow, it depends on the stock. At this point, I do benefit if the stock just go down just a little bit. So I will either sell the January or I'm going to sell the November $30, you know, roll it from the 27 to the $30. So SQ have been an amazing trade for me because the price have dropped close to 60. For me, I consider that like a value place. SQ have been increasing their sales and their return. Their PE have been dropping significantly over the last few years. Let me show you. So if I took this and I show you the PE ratio for block SQ, you can see like it used to trade at such a high multiple, man. And now it's been decreasing over time. If you look at like 6 months, it's almost like absolutely the bottom. There was a little bit lower, but nonetheless, you're getting such a great return on it. And if you see their fundamental, let me show you here. So this is SQ. Look at this. Look at the forward PE. It's only 14.49. Look at the price to earning to growth, and you can check the rest of it. So going back here, let me show you my trade. I have 2 options that expire tomorrow. I have the $60 put and I have a 3 contract here. If I scroll down, you see I opened the first on July 5th for $249. The price continued to drop down, so I opened a second one for 286, collecting a bigger premium. And then the stock continued to decline, but I haven't changed my mind about the stock. And that's an important fact. When you have confidence in that stock, you won't change your mind quickly just because the stock price went against you. So you see here, I sold another contract for 425, almost double what I got the first time. Well, a little bit less. But anyway, you see my average was 320 per contract, and you see now I have unrealized gain of 99%. Absolutely amazing. I have a $951 unrealized profit. I can close it right now for just $3. I can't ask for anything better. I'm probably going to wait for it to expire out of the money tomorrow, unless I need the cash for Microsoft, which brings us to the last name, Microsoft. Let me show you here the two trades. These trades worked against me. The price of Microsoft is 418, 419. Of course, the market is still open, so we'll keep changing the price. If we look at the year to date, you see that Microsoft went up significantly throughout the year. It's have been volatile, going up and down. I opened these contracts when the price of Microsoft was above 450. So unfortunately, it works against me since Microsoft have dropped. You can see here, even if it dropped, it has dropped lower. It have dropped to 395, but it's been slowly recovering, which I like it. My current position, I only have 100 share, and I have been selling cover call and roll it over time. So my last rollover is 450, which is in great position, of course. I'm not worried about it. Let's take a look at the two put credit spread. I didn't get hurt as much as I would have been if I only have sold a cash secure put instead of put credit spread. Why? Because my maximum losses is $1,000 per contract minus the premium that I collected. So if I show you the premium that I collected here, you see I have collected a $303, meaning the maximum I can lose is $700 here. Let me also quickly show you the 450 over 440. It's unrealized losses of minus 180 because it's down 1300. I have only collected 363 average credit. You can see here the two contracts that I opened. This is the first one and this is the second one. We do need to roll it over. So let's take a quick look what we're going to do here. We go to the option and let's take a look at the 430 over 420. So you can see here, I am obligated to buy for 430 unless I bought to close. So I'm going to buy to close. And at the same time, I'm going to sell my insurance, the 420 for 200 credit. Now, if I want to close this just like this, I'm going to have to pay 850, which is a big loss for me. I don't want to do that, so I'm going to roll over at the same time. So we can go something like October. Actually, in October, I'm going to be in Tokyo, so I might as well take it to November so I can enjoy my vacation better. So let me see here. So I can sell something like the 425 and collect credit 11.71. However, in this case, I'm going to have to put a lot more cash collateral than the 1,000 I put at the start. I'm going to add another leg to this trade. So I'm going to change it to buy and go down all the way to the 300. You can see the 300 here. This is the bid and ask. It's a little bit wide and there's only two volume, but I don't mind it. So I'm going to buy this for $77, and that significantly reduce how much cash collateral that I need to put. So you can see here, if I said I want 11, and I price on review, you can see that the cash collateral become 11,500. Allow me to roll over all three of my Microsoft for a credit, of course. You can see the credit is absolutely amazing. You're getting 1,100 for a losing trade. Again, we are taking a bigger risk. Keep that in mind, because right now our insurance is all the way down at 300. And I only bought it just to limit my cash collateral. I don't anticipate the price to go down a lot. Let's go ahead and take a look quickly at the other option. Is deeper in the money. However, it still doesn't affect us any worse because of the 440 protection that we have. So in this case, let's say we sold this, so we have to buy to close. You can see it's a cost to our account, and then we are selling the 440, which result in a credit to offset it. So now it's 10.12. Of course, it shouldn't be above 10, but this is because of the bid and ask. It's a little bit wide right now. I can roll it over to the same strike that we just saw for the other put. I can go ahead and sell the 425 And then I will do the same thing to limit the credit, and I will to limit the cash collateral, sorry, and I will buy the 300. So you can see the total credit that we're collecting, and I can put two contract. I can put the exact amount that I want, and I will receive about 1900, and the cash collateral is 23,000 in this case for both contract. This is what I'm gonna do. Probably tomorrow I'm gonna wait. As I told you, tomorrow is the third Friday of the month, meaning the monthly option is going to expire, so it's gonna have increased volatility. So hopefully it work to our advantage and Microsoft maybe go up. It will only improve my position, allow me to collect more premium while rolling over. That will be all for today. I hope you found this useful. If you have any question, please don't hesitate to drop a comment, hit the like button, consider subscribing to the channel. As always, the information provided in this video is for educational purpose only and should not be constructed as a financial advice. Investing involves risk, including the potential loss of principal. Thank you guys, and see you in the next video.